All right, so today we are going to learn about bridging towards how India's UPI informs the future of open payments. So UPI is something which is kind of really new and exists only within India. And what I wanted to do here is just wanted to give you an introduction about what it is and how it is how it has caught up so much momentum in so less time, and how we can kind of collaborate this with ILP for the future prospects. So let's start with a really quick introduction. So UPI was something that was started in India in April 2016, when there was also demonetization that had happened, and India was kind of going towards a cashless economy in general. So UPI kind of helped facilitate that as well. What it is basically UPI stands for Unified Payments Interface. It is basically an interface that enables users to make transactions really quick with the use of mobile apps without having to share the sensitive details of their bank account and all those numbers and sensitive personal details. So we'll look in later slides how it manages to do that. But for the quick introduction, it is basically a real-time payment system that enables bank to peer-to-peer transfers and also peer-to-merchant transfers. So, all right, let's see how does a basic UPI transaction work. So, for example, assume you want to send some money to your friend. So what will happen is there's a device that you have, and you have some third-party apps installed on that. For example, Google Pay or Phone Pay, and there are numerous such apps which also provides a lot of cash rewards and other perks. So you have one of these third-party apps on your device, and then you enter your credentials and you enter the details of the person that you want to pay to. Now, unlike traditional transfers, all that you need to enter is the phone number of the person that you're paying to. And once you've added those details, NPCI will go to basically your bank, and it'll go to the nearest PSP on which the data is stored about your bank, and it'll contact your bank, it'll take out your account details and how much balance you have, and if you have enough balance to make this transfer and all those details. And it'll validate basically all the credential data that you have entered. And next, it will contact the payer bank, the person that you are going to send the money to. It will contact the nearest PSP on which the payer data is stored and retrieve all that data and basically send you a notification saying that, okay, this much amount has been debited from your account, and also send a similar notification to the payer, to the person that you're kind of sending the money to. So all that is orchestrated by NPCI, and this is unlike the traditional bank systems, because this is done with the, just with an app, and you don't have to stand in lines or interact with the traditional systems that banks have. Now let's kind of take a deeper look at the architecture of UPI and how does that work. So on the very top level, you have these third-party apps that I just talked about, for example, Google Pay, Phone Pay, and also the banks also have their own apps. Like almost every bank in India has its own app integrated with UPI. So on the very top level, we have those apps. Now, those apps are connected to the banks. So it's not like that you can just make a transaction without integrating the bank, just with the UPI without having the bank in the picture. So all these apps are connected to the banks through a central repository which has all the information about all the banks and all the accounts that exist in those banks. This piece together is called payment service providers. So payment service providers are kind of the amalgamation of the third-party apps and the central information about the banks. So this goes into the UPI, which is Unified Payments Interface, and that is how the transaction happens. And there is this layer of VPA, which is basically that you don't have to share your personal data, and you don't have to share your sensitive information, and that is kind of an abstraction layer on top of that UPI takes care of. Let's see how is UPI system operated. So it's operated using a mobile app, which is done to make it hassle-free, and then VPA, which is basically a layer that removes the sensitive information sharing part. It stands for Virtual Payment Address, which is a unique identifier of the payer and the payee. so that, kind of a unique token that is generated with all the sensitivity details, which is unique to you as a user of this interface. And then transfers. So UPI enables both peer-to-peer and peer-to-merchant transfers. And there is also this two-factor authentication, which is called MPIN security. So every user has an MPIN that kind of secures the transaction further, or your wallet further with two-factor authentication. And then there is 24/7 availability, there is expected no downtime, and it also allows you to have a variety of services. Like if you go to India, even a small vendor in a very small town of a remote state would have a QR code hanging on top of their stall or whatever. So that is the level of integration into the ecosystem that we're talking about. It's very widely accepted, and people often ditch the credit card rewards and all other rewards that other systems are trying to give them for the ease of use that UPI brings with it. And next is instant confirmation. So it's strong consistency versus eventual consistency. So the bank transfer is made immediately. It's not something like something that happens in US, like you pay for a burger today and then you sign the bill and then the actual transaction will get processed in 3 to 4 days. It's instant confirmation and instant strong consistency, basically. So what actually made UPI such a big hit in India, and how is it so widely accepted within such a short span that it has existed for? So first is ease of use. It's super easy to use. All you got to do is just scan a QR code, enter the amount, and that's done. So before this, there was not such an easy-to-use system that existed. So it was widely accepted because of that reason. And then interoperability. It works across multiple payment types and multiple banks. So that is also one of the factors that kind of contributed to the success. And wide acceptance, as we just talked about, multiple vendors, and almost everyone has a QR code for UPI, because you don't have to really go out of the way to sign up for this. Thanks to the government support for this, which is also one of the next points, that government has pushed this very heavily during the time when India was moving towards a cashless economy in general. So this was also the perfect timing for all these transaction systems to kind of take off and be an early adopter in the market. And then, let's see, financial inclusion. So there are multiple users, and generally it doesn't depend on what is the amount in your bank account. A lot of people ranging from all sectors of the society have adopted UPI. Security, apart from the normal security that the bank transactions have, UPI transactions also have this other added layer of two-factor authentication, which makes it even more secure than the traditional transactions. And then low transaction costs as well. So the government, in the beginning, decided to bear the costs of transactions themselves to kind of motivate people to adopt this as a mode of payment. So lower transaction cost is a win-win for both the seller and the buyer, right? So that is also one of the major factors. And then government also introduced a lot of schemes when it was kind of taking off, so that helped as well. I'll talk about the similarities and overlaps between ILP and UPI. So ILP and UPI are not really the same things, and they are not really targeting the same target users as well. But there are still some overlaps between both these protocols. ILP is a transaction protocol, and UPI is a payments interface. So these are fundamentally very different things, but let's talk about some of the overlaps that they have. So one is focus on interoperability. ILP is mostly focused on the interoperability between different ledgers and different payment networks, for example, cryptocurrency and the traditional bank networks. Whereas UPI is interoperable. The interoperability in the sense of UPI means different banks and different payment institutions within India. So that is something that both of these are super focused on. So that is one of the overlaps. And then simplicity and user-centric design is also something that both of these are focusing on. And the speed and the real-time processing, as we saw that the real-time processing, which is strong consistency, that is also one of the factors that is kind of overlapping here. And last is digital identity and security. Security continues to be a huge pillar that both of these are focused on and is kind of the most important thing for both of these. So that's there. Okay. The last thing is future prospects and the opportunities for collaboration. So one of the major things that I just wanted to kind of bring attention to is cross-border payments. Given the integration of UPI within India, if we kind of match that with the ease of access that ILP protocol brings with itself, I mean, imagine there is a contractor that is working from India for a US company. Right now, what they have to do is they have to set up an entity within India, and then there is like a hugely complicated process that they have to get paid with. So if we just match ILP's interoperability within the different networks and currencies with UPI, I think that this can open a huge world of possibilities there. That's all. Thank you.